Good morning, everyone. It's Monday, August 8th. Taking a look at the morning charts this morning, I've got the U.S. bond futures, or the bond futures contract up. This is the daily chart, and what this shows is just how bond prices have rallied in the past several months, and really in the last month we've seen it really skyrocket and take off to the upside. And that's simply because I think everybody's fearful of the stock market that is going to crash, and we're seeing money move into the safe haven, which is bonds, where they can get a guaranteed return on their money. Now, with on Friday we saw the U.S. bonds from the S&P get downgraded from AAA to AA plus, and that actually sent bonds sharply lower in the afternoon. But this morning we're actually seeing bonds continue to hold up and actually push higher, and I think that's kind of it kind of makes sense there. Simply, I think a lot of people realize that the U.S. isn't in as good shape as it used to be. Obviously, their investments aren't as good as they used to be, so they have to get downgraded somewhat. I don't think there's a big difference between AAA and AA plus. I think it's just something that they did, and I think it's actually going to boost the U.S. dollar, because what we're going to see is if we do see a bit of bond prices continue to pull back, we're actually going to see rates rise, and we'll probably actually see the U.S. dollar firm up and rise also with a rising interest rate. So it's going to be interesting to see how this plays out over the next couple of days. I thought it would have actually had a bit more of a hiccup with that news to the downside. Really, it only sold down only about half of the previous day's move, and now we're trading right back up, giving more or less taking back some of those gains, or giving back some of those gains this morning. So it's going to be interesting to see how the bond plays into things going forward, and we'll keep our eye on that for a possible trade setup. Now, looking at the U.S. dollar index, you can see here this is the 4-hour chart, and this is going back about 2 months. And you can see the past month or so we've pretty much been rallying up, pulling back, rallying up. We're forming somewhat of a it depends how you look at it. It could be a bit of a bull flag, could be a bit of a double bottom. We've kind of got a bottom here, a bottom here. Overall, it is channeling up pretty good. We did have a spike there last week, but it came right back down to the support, and this morning we're bouncing back up. So it's going to be interesting to see how this plays out. Overall, the grand scheme of things, the U.S. dollar is down, the trend is down, and this is still forming somewhat of a bear flag. We have this nice double bottom here, but I still think it could continue to play a little bit lower, or possibly make a third kind of bounce here. And really everything's kind of at an awkward situation with the stock market right now: bonds, the U.S. dollar, the stock market. And it's going to be interesting to see how things kind of move in the next little bit, and see which way things want to go, and what the demand is, the volume, and the price action. So we're going to kind of sit tight right now. We're going to look for some type of setup. If we take a look at the let me just pull up the SP 500 here. We've had a huge sell-off the past couple weeks in the U.S. dollar. If we just zoom all the way out here, we've seen repeated selling. It's been picking up momentum. If you actually zoom in and see this recent price action, we've gone more or less into waterfall mode, where we're starting to bounce these bottoms and pick up momentum, where it's just kind of in free fall. And if we just zoom out a little bit, you can actually see the put call ratio on the bottom. It's been slowly working its way higher and higher and higher. People are getting more and more bearish, and we're seeing the average NYSE advanced decline line, it's more or less working its way lower. And we've saw some huge panic selling on Thursday, and we got follow through on Friday in the morning. We had a nice bounce back up. It does feel as though the market is really trying to put in a bottom here. Even looking at the daily chart, which I'll show you in a minute, it's extremely stretched to the downside, and a lot of damage has been done to the chart. This morning futures are trading lower. We are trading right back down to these Friday's lows, as I think that had to do with the U.S. downgrade on the bonds. But we'll see how that plays out. We could put in a nice little double bottom here. It could start to form some type of base, and then possibly start a nice rally to the upside, or a nice bounce. Now, if I do pull up the daily chart, I'll show you kind of where we stand here on the grand scheme of things. This is the daily chart zoomed out so you can see all 2010 and so far this year 2011. More or less, I feel as though we're kind of in something like this. You have this great big sell-off, and then we're going to get a really strong, I think, short covering rally to the upside. You can see here the market plunged straight down, and then there was a big rebound right back up under key resistance, and then from there it rolled over and started to head a bit lower. That's kind of where I feel as though we stand right now. We're way overdone to the downside. We've had a lot of news come out that has really pushed investors to just kind of eject out of their seats. I think we're going to get some type of strong bounce back up into this key resistance zone. At this point, I think we're going to see the market kind of chop around, try and put in a top a bit, and I do feel as though we could actually be heading quite a bit lower. That's kind of where I stand right now, and with the current price action, it's showing that that's kind of what we have. So we're going to see if we can get involved in this bounce, because there is a lot of potential left in this bounce. And when we get up here, we'll actually most likely be looking to short the market. But of course, that could actually take another week or two to unfold, and we'll see how the market changes from then. And depending on the size of this bounce, you'll notice that tops usually take a while. It usually takes 2 to 3 months for a top. So we could chop around for a couple months here, and that'll give us a better indication of kind of what's going on, and we can adjust our position whether to be looking for continued upside in the market or for it to roll over. So that's kind of where we stand, but my gut feeling right now is actually pointing to a stronger US dollar overall and lower stock market, and we could come all the way down into a pretty major support zone down through the middle of this congestion here back in 2010, and possibly even go lower. So that's kind of where I stand right now on the technical outlook of the stock market. Now, taking a quick look on the crude oil chart. Here is the daily chart of crude oil. You can see it's just gone right into free fall mode, picking up momentum. It's starting to look like it wants to bounce. The past couple of days we had this nice dip, and it pulled right back up to close almost flat for the session. But this morning we're seeing crude oil head a little bit lower. It's still trading within that candle, and I do feel as though crude oil is trying to put in a bottom here. If we just zoom out a little bit, you can see we're coming right into more or less a pretty key support zone, which is the middle of this congestion, and a couple pivot lows here, and so it's trading right in there. It'll be interesting to see if we can get a bounce, but right now I'm not all that bullish on crude oil at the moment until we see some stronger economic numbers. Really, they've just been getting worse, and of course a poor economy uses less oil, and there's less demand for it, and we'll just see oil continue to slip away. Taking a look at gold and silver, it's the 4-hour chart. Precious metals are trading up nicely this morning. Of course, with the uncertainty and fear, we're seeing money move into the safe havens. And so far, gold, we're seeing it gap up about 45 points. It was up almost 60 points at one point this morning. Right now, it's trading at 1709. And so we're going to have a nice pop in gold this morning. Same with silver. Silver is trading up about... from Friday's close, we're trading up about $2, $1.50 an ounce. So we're going to see our precious metals position gap strongly to the upside, and hopefully we'll actually get continued running in that today and see it actually break away and move higher. Silver's the main one kind of holding things back here for the precious metal fund. It looks bullish here. We've got a nice surge up, a pullback. It did break a previous high, and if it can get some traction today, I think we'll see it pull up to the 41, possibly 41.50 area, and then from there we'll see if it can consolidate and eventually break through the highs and go higher. But silver's been underperforming. Simply the big sell-off and the fear in the market, we saw silver move down with that, and that's partly because silver is still seen as more of a speculative investment for a lot of people, and when they get scared of stocks and they get spooked out and they want to go to cash, they just sell everything in their account, and a lot of times it will hold silver because it's a volatile investment and people are in there trying to make some quick speculative moves on the big swings that silver does have. Take a look at the VIX Index, which measures fear in the market. You can see this is the weekly chart. It gives you a good kind of look at what's going on. You can see the '09 fear in the market and the VIX back here, and then we saw the flash crash and the pullback last year in May. And then this year in March, we had this spike, which put in a pretty nice bottom in the market. And right now, we're creeping back up to the flash crash back in May, which is also what I just showed you on the daily chart of the S&P 500. You get that sharp drop, and then you get a sharp recovery, and then you see the market head lower. And if you just look at this chart, you can see even back here in the flash crash, the flash crash back here in May in 2010. By looking at the chart, this is a weekly chart, we still have potentially 2 or 3 more weeks of some pretty choppy market ahead. So we could still see it rebound quickly, but I think it could get sold right back into that bounce. And I think it's going to take a little bit to stabilize. So it could be a choppy couple of weeks going forward, but I do feel as though we're going to get some type of knee-jerk reaction bounce back to the upside. And I think overall a lot of people are still very bullish on the market. And once it starts to bounce, there's going to be a ton of short covering. So it'll be a short covering rally, which will send the stock market up very quickly. And then I think it's going to actually get a lot of investors back on board. And of course, that'll bring it back up to a key resistance zone, at which point I think we'll be looking to hopefully lock in some gains and potentially be looking for a short position for another wave down that I think could be following very quickly after that. Anyways, that's it for now. I'll just quick give you a peek on the futures chart to see what's going on this morning. This is the 10-minute chart of the S&P futures, and this here is Friday's price action. We saw the market gap higher. It sold down very sharply in the morning, had a very quick knee-jerk reaction right back up. More or less, it hit the 200 period moving average on this chart, hit it again this morning. So it is finding resistance, but overall it's found a bottom several times in the past couple days, and we'll hopefully see the market try and form some base here and eventually rip to the upside and break some highs, and hopefully we'll get a setup to go long to catch this. Hopefully we get this knee-jerk reaction bounce and give us some quick gains that'll last a few days, and then go from there. So that's where we stand right now. Again, the S&P closed up here on Friday, and right now this morning we're trading down here. So we've got this gap window of about 2%, percent and a half, and it'll be a pretty big moving day today, I think, with the news of the bonds being downgraded. So anyways, that's it for now, and I'll talk to you guys in a bit. Bye-bye.